Looking at the volume profile, this is the US oil. Looking at it, you understand there has been a down move, and now this is the bottom of the value area. There's also, if you expand it, you will see some little levels. For example, there's a level right here where the market is trying to either break it or go higher or coming back down. You don't know. You also have to pay attention to the previous touches. How many times the crude bounced from here. You see this one, which was this area. These two, which was here. Now, there is no clear picture of what the crude is going to be doing. Yes, it looks like it's support. It looks like it wants to go back up. It looks like it's a long-term uptrend. But you don't know. In cases like this, I'll give you just one example. Is I would go back and look at my different charts, and on these charts you don't see any other indicators yet. We will add indicators as we go. You don't see any indicators yet. But I'm using a 30-minute chart, for example. You can use 60. You can use tick chart. Up to you. And I'm seeing something like this now. If I grab my 30-minute chart, I see more details. I see how the crude has been hovering around these areas, and all of a sudden, from the education prior to this, which was mostly on the YouTube channel, you would understand there is a level here that you have to be aware of. This level, once we get into it, it might continue. But see how the market is rejecting it at 95.20. So this area you have to be aware of. This is the least favorable area for you to catch a long, because it's trying to bounce from a resistance. Now, not knowing these levels earlier, not seeing them, you wouldn't know that this would have been a big resistance. You wouldn't know. Once you plot your volume profile, see how the whole area looks messy, but in reality, it's not. If you look at it this way, you see how most of the volume was accumulated in the middle. See the red area here. You see how the crude bounced from, for example, here, bounced from here, bounced from here, going up, and previously bounced from here, as you see. So you have to look at across your chart, you have to look at the areas that have been tested previously before you make decisions. So in this case, if I have no choice, if I'm forced to trade, I would choose a short on crude at this point. And once we break into this lower level, we might see it coming even further down, and that's coinciding with this view. See, once we come back down lower, we might finish to 88 or 84. Okay, so again, you don't have to look at a 30-minute chart. You can see it at, let's say, 987 tick chart, 987T. Enter. That's your 987 tick chart. Even nicer looking, as you noticed. See that? Nicer looking, as you noticed. So now, do I need to go short here, for example? Notice how the crude bounced down from here, and now it's trying to bounce up from here. So again, this is if I had to grab a short, I had to grab it. I would have grabbed it much earlier than this area. In the future videos, we will learn about stop losses. Where would be my next stop loss? So if my stop loss is about 95, for example, 50 or 95.40, why would I grab it from 94.20? That's a 100 and extra, more than 100 ticks or pips in risk. And also, not knowing this, not knowing that there is a support in this area, it's touching the support, as you noticed. The support coming from the fact that this entry level is going to be completely down if it pokes into it. So the market, the buyers and the sellers will try and fight this area, 94.20. They will try and fight it out. So if you had to go short, you should have gone from the top, right? Knowing this is a previous resistance, or previously you knew this was a resistance because of the volume profile. See, this whole area we call them ascending descending contracts. It's not solid like this one. This whole area creates that instability until we get to somewhere in the middle or top of it. Okay, so and then you see how it's bounced, poked into it, and started coming back down. So at this time still I'm not trading it. Again, if I had to trade it earlier, it would have been a short. At this time I have to hold, and maybe if I'm short from the top, I would have taken some profits in this area, but for now I am not. If you want to maybe catch a smaller level, you scale down to maybe 466 tick chart. That's one of my favorite crude charts for trading. 466T, like Thomas, enter. That's my 466 chart. And here, again, this is for me to find a level for trading. I might look into somewhere in this area for a short. Because if it goes back up to this area, it might poke it and go higher, right? Or even maybe here. Again, these levels are not, what I'm showing you here does not qualify for trading as is. You have to add the rest of the indicators to this. I'll give you an example. This 987 tick chart here on the crude has all the indicators that I want to trade. And if I scale out like this, you see how we have a power line that will help me to catch a trade from here. And at that time I might have something like this arrow, or even a DRL to help me out. Okay, so you have to be patient. You have to add the rest of the indicators. At this time you are just learning about volume profile. And you notice on a small scale the crude went further down, and it's stuck between these power lines, which will be the subject of a different video later. But for now, if you understood the idea, the importance of seeing volume profile plotted ahead of the market moves, so you understand what to do and what are your best levels to get in.